Hello traders, just a quick video talking about advanced market structure with a couple of students in the ICT 2022 mentorship Discord. I wanted to create this little intro to give you a little update on this channel. I've been very busy, so I'm sorry for not uploading, but I plan on doing a monthly, weekly, and daily analysis after the fact because I don't want to be liable about you taking trades off my analysis and talking about like errors that I've done and how I formed my analysis, how I'm going to improve next time. I think it'd be a cool little series. It's kind of like bias training for the both of us. New video Friday, maybe? I don't know. I'll try to shoot for Friday. No promises, but that'll be on weekly analysis for this week. That being said, thank you, Pure Chaos, for the clip of this video because I forgot to record it. So props to him, and I hope you enjoy.
I guess you answered now the question from Pure Chaos, but then also him and me got confused with the last short-term high, because the more I think about it, for me or when I look at this chart without any markings, for me this would be an intermediate term high.
This one here?
And yes, and adding context to it, it also reacts to an order block from the previous intermediate term high. Not this one? This one, yes. Because inside that candle, like there's an order block. No. The last what the fuck? Yes.
Your midterm high? This one here?
Yes.
Oh, okay.
And then I got confused. Okay, wait a second. It's reacting to an order block inside of this candle. And yes, it's not filling an FVG, but it's either one of those criteria.
Yeah, I don't know if I'll have to go back through my notes if ICT mentioned that an order block retracement is classified as an intermediate term high based on the YouTube model.
Yes.
How I think of intermediate term highs versus short term highs is an intermediate term high taps into an area where I think price should resist. So next time we shouldn't come back and take out that high. Since this is technically resistance,
Yes.
price should not take out this high if institutional order flow is bearish.
I mean,
Does
for
that make
me,
sense?
yes. For
Okay.
me personally, I don't specifically look at intermediate term high, short term high, because I know, okay, this high shouldn't be broken and it should react from there or whatever.
Okay.
But the confusion was there that this short term, this last short term high, for me is an intermediate term high.
This one here.
Yeah, and
I mean,
I'm
technically it can be an intermediate term high because price shouldn't take out this high because it's retesting an order block and it's converging with this fair
yeah,
value gap. But
and
at that, it's a short term high in comparison with this intermediate term high. But if
yeah,
like for example it left a fair value gap here and price retested it here, this would be an intermediate term high. This would be a short term high.
okay,
And then it seals off.
yeah, then
It's just in the scope
makes
of
sense
what
now.
you're looking at.
Yeah,
Okay. Like this isn't
because
an intermediate term high. Price could have wicked. I mean, if this fair value gap wasn't here, price could have wicked up and taken out this high if like there was a fair value gap in like one of these price legs,
yeah,
wicked into that fair value gap and then sold off. That would make this an intermediate term high, and then this a short term high.
okay.
Short term highs can be swept for buy side liquidity before selling off.
That's why I leave this whole intermediate term high and short term high a little bit out of my trading
Yeah.
plan, because as you said, if you watch the next 5 minutes uh, of this screenshot, or I don't know how I should call it, then the one short term high is an intermediate term high, you know. But
In this
I
one,
just thought of it that the last short term high, okay, the next high, whatever, it doesn't matter if it's a short term high or intermediate term high, it shouldn't go above the intermediate term high before.
yeah. Mm-hmm.
But that's actually a good point that you said it, that also short term high in the right context can be an intermediate term high.
Yeah. In this example, it's a short term high to this intermediate term high. If I was
Yeah.
gonna scale down into this short term high, I could probably see an intermediate term high kind of form inside of some sort of fair value gap left in this. price action follows on like a 1-minute chart or something like that, and then you could have entered off of a short-term high. But I think I might have done that, but I don't know if I have the notes for it. Here's an example I shared on that PDF. There's two here. There's one for bullish, one for bearish. I'll go over the bullish one first, where we have a long-term low that retest into this higher time frame fair value gap, and we break higher, break above an intermediate term high here, and then this is an intermediate term high. Remember, intermediate term highs can also have two short-term highs to the left and to the right, kind of like a head and shoulders pattern, like this here. And so then we break lower, fill in this fair value gap, enter here, not expecting this long-term low to be broken. And we get pretty close. We almost tap into this higher time frame fair value gap before extending higher. And then the same
Can you
thing for
go
this.
to the previous screenshot shortly?
This one?
The left one.
Oh, go back to
Yes.
this one.
Because for me, I would, or for me personally, I would say that this intermediate term high after the green marking bullish market structure drift, this for me would be a long-term high, and after that gets broken, then I'm bullish.
I mean, yes, if this was broken, you can see it's broken by a fair value gap, which is retested here, and that could have been an entry. When I label stuff like this, and I'm in a bullish context, I label more of how bearish order flow is moving than bullish order flow, because I'm not going to label a long-term high, because in the sense of this long-term low, I do not want this to be ran out. If it is ran out, then
Yes.
I'm negating the trade, and I'm not taking any trades for the day.
But also
That's kind
for
of how I think about it. It's like a major swing point that if it's violated, it negates my whole bias for the day.
but also this intermediate term high would make sense following the rules that it reacted to an order block to the left.
You talking about this one?
Yes. This one reacted to an order block.
Are you talking about like something over here? Like
No,
retesting over here?
this intermediate term high, or isn't it a order block? Like the first candle it touches if you go vertically to the left. Yes.
Kind of. It not really, because it kind of violates this high here. Like if we're measuring this as an order block, mean threshold would be probably like right here, and it kind of taps into it, and then it kind of wicks past it. I wouldn't be looking at bearish order blocks in this context anyway, because I'm only looking at this setup here. So I'm not looking at like shorting every bearish order block and going long every bullish order block. I'm only looking at, this break of market structure here, take out the stops below a low, fair value gap left behind, enter, and then ride to take out these equal highs, and then possibly subsequent higher highs. Do you want to go over the bearish example?
If you want.
Okay. All right, bearish market structure shift after price retest a daily bearish fair value gap. We go short when price hits the 1-hour fair value gap with the anticipation of another intermediate term high. Notice how price ran the long-term high for buy-side liquidity, completing the mitigation of the daily fair value gap before confirming a bearish market structure shift. Yeah, so we have this long-term high here that taps into it, and then intermediate term high here. You could have entered early here, looking for like this high, or excuse me, this low to be taken out. Maybe a partial and internal range liquidity. This, if you would have held for this low, it would have been a loss. Then we take out the high here, completely filling in the fair value gap. Intermediate term high, intermediate term high, intermediate term high. Let me know if I was speaking too fast on that one.
Maybe it's just how it happens. Hello, new one. Because this long-term high, the second one, broke above, is there any reason for that whatsoever, or is it just in the, I don't know, 20% loss rate?
For how I structure my trading plan, how it like goes is I have 3 time frames. I have like a long-term time frame for like higher time frame analysis. I have another time frame where I look for an entry pattern, and then the third time frame I entered on. And based on that, I have two criteria. I have an internal range uh, discount, like when I'm shorting, a discount, and then an old low. And then the other time frame, the second time frame, internal range, uh, old low. And then same thing for the third. So partials would have been taken after the break of this short-term low, and then the return into this intermediate-term low. Would anticipate this intermediate-term low to be broken, but instead we kind of consolidated and then ran back up to completely fill in the fair value gap before taking out this low. So it would have been a loss if you would have held for the final objective without taking partials. This is kind of why I take partials, because you don't know if price is going to completely refill this fair value gap. Based on how structure is forming, this is a higher time frame fair value gap, and breaking this short-term low with the creation of this fair value gap, entering here, that's perfectly logical to aim for this. But just in case it doesn't happen, because this can happen where we just run and fill in the fair value gap, you know, we only partially filled it. We didn't even get to the 50%. So I would aim for this low, aim for that internal range, and then move my stop to this intermediate term high. It's broken. We completely fill, and then look for a break. You could have entered here, and then or here.
I mean,
That's what I can
it
see.
still would have been profitable. Oh, what the fuck is going on today? You know what I mean?
Yeah.
Like ICT said, internal liquidity, partials, external liquidity, completely close the trade.
Yeah. I've realized I make it a lot easier for myself when I break it up into those 3 time frames. So that could be daily, 1 hour, and 5 minute, or daily, 15 minute, 1 minute, something like that. Like the time frames of 5, 4, 3, 2, 1 that I enter on, and then the macro view of the daily time frame or 4 hour, and then that medium view, that intermediate term view of the 15 minute or the 1 hour. And that's kind of how I break it apart. And then I only look for fair value gaps in discount. I don't look for order blocks, for rejection blocks, any of that. I can just look for a fair value gap. I can see it, exit as soon as it touches it, and go on with my day.